Aditya, good having you and good day to have you.
Nice to be here.
Yeah, 12,000 on the bourses yet again. How do you approach your thesis when you go out and speak to your large clients now with the Nifty at 12,000, earnings not quite out there, the global situation looking a bit mixed, but there is political continuity?
Yeah, I think obviously the political continuity comes as tailwind, not necessarily in terms of what it does immediately, but from a longer term perspective, it just removes a certain amount of uncertainty that comes from such events. I think that's one part. I think the other part, along with the government, is what will the government do as it starts out. Now, what this event has had is, unlike previous election cycles where there seems to be a fundamental risk on that is created with businesses and with the individuals, I think it's been a little less this time around because in part you have had the same government, in part because the economic cycle has been a little weaker. So I think what is important to see and anticipate is how the government goes about its first budget and its initial efforts. And our sense is what they should do is actually go out and push aggressively from a fiscal perspective, from a monetary perspective, from a liquidity perspective, because what they need to do is get the business cycle starting. And if you don't have that going and you continue to be rigid in terms of the fiscal numbers that you're looking at, the slowdown could continue a lot longer. So I think a lot will depend in terms of how the government tends to actually approach the start of the cycle. And it is imperative for the government to do it because I don't think business itself is going to suddenly have elevated risk appetite. And it doesn't seem like there's going to be a lot coming in from the global side.
Are large institutional clients on the global front, when they talk to you, are they looking for these cues? What is it that they are wanting to see when they are looking to put in fresh money to work?
See, the way I see it in terms of what the government does, it's still mixed. And there are mixed opinions in what the government should do. There's a segment that believes that you should be a little tighter and you should fiscally consolidate. So I don't think there is consensus there. So I think what people are looking a lot at is fundamentally the kind of approach that the government has to start with, and B, the business cycle. Are you beginning to see revival there? And I think that remains a little tepid. You've got the odd good results. It's probably not been as disappointing as cycles in the past. But I think what you're effectively waiting for is a little bit more good news. I think what the market and investors across the world will look at is trying to figure out whether the slowdown that we've seen over the last couple of months, whether that's a dip or it's actually something a little bit more serious.
What are you penciling in yourself?
From
personal opinion.
Yeah, my perspective is it is more than just a dip. And so to that extent, you will require reasonably aggressive policy support to get it out. And you need to have that coming in early rather than waiting for the entire cycle to play through.
Okay. By the way, KNR Construction is now down 9%. Keep in mind, such accidents may happen. Again, we do not know if NCC's projects collectively have been cancelled or some other projects have been cancelled and how much of an impact comes in on the books. But this becomes an important stock to monitor today because these things could happen in a limited way here and there. The news, of course, for all of you who are joining in right now, the news seems to be that the government, the Jagan Mohan Reddy government has gone out and presumably cancelled some of the projects tendered to in the past, and that might have an impact on some of the companies operating in that area. So do watch out for that. But that doesn't take away from the fact that the larger market is in a buoyant mood. What aids, Aditya, to this sentiment is crude and the pullback that we've seen simultaneously as the exit poll verdict started coming in. So one, that political continuity view was there, and crude has come off quite rapidly in the last few days.
Yeah, effectively that tends to help. Right, but I think if you start valuing or evaluating India really in the context of how crude moves, I think then you shouldn't be valuing India as high as it does.
If it was moving up, it would have been a concern, right?
I think that works against it at the margin. Okay. But quite honestly, as I said, I think India's valuations, the framework that it operates at, suggests that it's an economy that is somewhat resilient to these cyclical elements. If it's only a contra to crude or crude makes such a big difference, then fundamentally a valuation framework should be lower. So I think on a day-to-day basis, you can watch something like crude, but very fundamentally, as long as it doesn't move out of an entire range, you're kind of indifferent to it.
Okay.
I think one thing that matters, of course, is what is the capital flow environment when crude moves. If you actually have a risk on and you have capital flows, financial flows coming in, then you're somewhat hedged. But if you have a situation where crude is going up and risk appetite is going down, that's a little bit more of a challenge.
Are foreigners looking to pump in more money?
I think foreigners are clearly looking at India with very open eyes, right? They've already pumped in some money in the early part of this year. But I think now it again becomes business as usual. The election bit, some might have played for it, some might have waited out for it. And I think more would have waited out for it. But then it tends to become a business cycle that the market tends to follow.
Okay, which of course the next couple of quarters will say. How are you placing yourself for this business cycle? For example, let's start with banks.
Yeah.
What do you do there? The really good ones, in the eyes of the market, the really good ones, priced to perfection and beyond maybe. The corporate-facing banks have also moved up. The smaller banks have also moved up.
Yeah.
The rising tide has taken everything higher.
Yeah.
What does one do now?
See, I think at one level, if one does expect a certain amount of fiscal support that comes in and a certain amount of monetary support that comes in, banks is a good place to be because any broad-based recovery that you need from the economy has to be via the banking system. So I think that's one bit. So I think we generally are overweight on the space. I think it's the corporate banks that at the end of the day have the best mix in terms of potential earnings support, potential balance sheet refix, and relative valuations, right? So I think to that extent, while it is a consensus trade, I'd say that these trades can go on for a bit.
Okay, so you would presume that there are over a 3-4 year period, there could be a multiple re-rating as well as earnings growth momentum and balance sheet fix that could come in for the ICICI, Axis, and the others, the corporate-facing banks.
In terms of multiple re-rating, I think you will progressively get a little bit more. I won't say it's necessarily multiple re-rating, but you will actually get earnings come through because the credit side starts tending to move. Remember, these stocks are expensive in themselves if you were to look at them from an earnings perspective, right? But that will start balancing out as earnings come through. And the risks would be that they would surprise on the upside.
So the relative valuation play, the multiple upside has been done now. Now the
I think in terms of pure multiples, I think that's been done. I think now it's delivery, it's the credit cycle on the upside, which will provide the surprises.
Okay. The other big talking point, of course, is the market assumption of what this government will do in the next 100 days, right?
Yeah.
And the manifesto seems to suggest that there is spend decided on infrastructure, spend decided on mining. A couple of things at least that I could notice. What do you do with infrastructure? Very few large balance sheets. The largest one, not cheap. The other ones could have these accidents like NCC has had today. How do you play that?
See, I think for a start, do remember that there's been a fair amount of infrastructure spend that's been going on in any case. So while I think it's there upfront in the manifesto, I don't know if the delta will necessarily be as much as the pure hard number suggests in terms of spend, because you can push it up a certain amount. How much can you accelerate is one part. So that's one. The second thing is I think you have to play with the biggies, whether it's the construction space, whether it is the L&T space, which are conglomerates. But I think what has happened with the economic cycle as it goes up is the big are in a privileged position in their capacity to take on projects, in the efficiencies that they bring, and quite honestly in the risk people who are giving out contracts are prepared to take. So I think in this whole space, whether you play the larger construction companies or the smaller ones, I think the story lies with the largest amongst them rather than going lower and lower. So I think that's one bit. This time, I think the infrastructure story will also play out a little differently because the nature of money that's going to come into the system is going to be different. You have these big asset holders which are coming in at a relatively early stage, guys who are buying out these assets. So unlike a lot of guys earlier, construction companies who took on developmental risks, I think that is going to be out of the equation. So that's going to be good for valuations relative to where they are today. And they'll be, the valuations might have been higher the last time around, but then they were paying for the wrong thing, right? They were paying for developmental assets. If people are going in and saying we're going to take risk assets by buying roads, I think that's moved to the yield side. If an equity player is playing that, people will want to stay away.
Okay. Interesting thought. But your answer prompts me to my next question then, Aditya. Are you, for the next, not necessarily the next 6 months, the next 2 years, are you playing for the delta or are you playing for continuity of growth? What is the bigger bet that you're taking?
At this point in time, we are playing for two things. One, a little bit of continuity of growth, right? And secondly, where will the delta come? So you actually raised this issue about infrastructure investments being very large in the manifesto. Something that was smaller, but I think was equally prominent, was the fact that I think you're going to get more support from these income support kind of schemes like the PM Kisan, which they said they'd actually expand. I actually think a lot of the fiscal stimulus will come in that space. because I think the die has been cast there. I think in the last budget, you actually gave out some money. It probably did contribute to the extent of the political win. I think that's an ask of the economy and of the voting population. And I suspect you're going to see more such schemes come through, more such spends come through, rather than necessarily all the fiscal effort going towards the infrastructure side. So I think, so if you get me, the traditional response to a new government is money in projects and large investments. Some of that will happen, but I think there'll be probably more that happens in income support schemes. So that will potentially change the dynamics of the growth that you get. See, the multiplier effect of that is great. Money going straight into banks, leading to consumption, leading to risk appetite, leading to businesses putting in money, right? The impact is very, very direct, and it goes to an individual, so you can actually get that sense upfront. We think there's going to be more of that rather than necessarily the traditional investment bounce back. Okay. So to that extent, from a portfolio perspective, what we would think is that we should actually play a little bit more of the staple space, which is a kind of a contra view, but you play that because money is going to go into the hands of a lot of individuals, and that's going to support low-end consumption.
Well, interesting that you bring this up. One, because it's a contrarian thing, and two, because the next guest up on the show will have his pulse on that space very, very closely. So Aditya, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. We should do these chats more often, Aditya.
Sure.
It was a pleasure having you today.
Thanks so much.